Hello folks, this is Nate Paulson with a special edition video update on Britain's recent vote to exit the European Union. With all the market turmoil, we felt this was a good time to reach out and share our perspective. Please stay tuned at the end for a required disclosure statement. We're going to answer 5 main questions in this call. What is the Brexit and why does it matter? How could the Brexit affect US markets? What impact could the Brexit have on the global economy? And how could the Brexit affect the US economy? And lastly, what should investors be doing right now after the vote? So let's start by taking a step back and asking, how did Britain get here in the first place? Economic and political circumstances have changed drastically since the 90s, and British citizens demanded a new national referendum on EU membership. The issues at stake were complex and involved British sovereignty, trade, regulations, and immigration policy. Ultimately, the vote was about this: did Britain see a future within the EU, or did it want out? As we saw, British citizens voted to leave. Now let's talk about the effect the Brexit is having on markets. The vote to leave surprised investors around the world who reacted by selling. This is not an unexpected result because markets hate surprises. History tells us that recent market movements are probably an overreaction in response to fear and uncertainty. If we look back, we see that since World War II, when there have been political shocks like this, the markets tend to overreact and oversell only to rebound in the weeks and months to follow. That could mean that stocks aren't tumbling. Though the past doesn't necessarily predict the future, we can look at other similar events as a guide. During the crisis around the Japanese earthquake in 2011 and the European debt crisis in 2012, markets experienced double-digit losses and then recovered it within 3 or 4 months. Will that happen this year? There's no way for us to know. While political events like this rarely have a long-term effect on markets, we should also keep in mind that 2016 has brought many geopolitical challenges to our door, and the headwinds may be getting stronger. We should expect a lot of volatility going forward and a lot of headline risk. Headline risk is what we call it when markets overreact to media coverage of events. We can also think of it as the Chicken Little syndrome. We'll talk more about that and what investors can do at the end of this video. Now let's talk about the potential economic impacts of the Brexit on the global economy. In Britain and Europe, a lot of the risks are political in nature. In Britain, it's possible that this vote will splinter the United Kingdom. Northern Ireland and Scotland both have already voted to remain within the EU, and they may vote to leave Britain in order to rejoin the EU. Britain also faces new elections in October once current Prime Minister David Cameron steps down. And you can bet the negotiations around leaving the EU will play a huge role in the elections, and it may get messy. Exit negotiations are also likely to drag on for months and possibly years and be the source of a lot of political footballs. We can expect plenty of volatility in financial markets as those negotiations are hammered out. Economists also worry that Britain could lose a lot of multinational corporations who rely on access to European markets and the free movement of European talent. London is the center of Europe's financial world, and a loss of those financial firms would be a major blow to the British economy. The fallout from the Brexit could be enough to push Britain into a recession, but we'll have to wait and see. Europe has several key elections coming up as well in Spain, Italy, and France that could be affected by Britain's vote. We'll be watching these elections carefully. One of the big worries experts have is that Britain's vote will be the first of many anti-EU votes that could cause a rush to the exits by other EU members. Britain leaving is complicated enough, but if a member of the euro currency union like the Netherlands or Greece left, the negotiations would be even more complex and time-consuming. No one knows what the breakup of the EU would look like, but it wouldn't be good for global economic growth, that's pretty sure. Also, many economists are a lot more upbeat about our economy. They think the most apocalyptic scenarios are overblown, and that even though the negotiations might be hard, European leaders need each other, and that would lead them to reach kind of win-win compromises. So how will the Brexit vote affect the US economy? That really depends on how divorce is negotiated. Again, there's no consensus among economists. Here's what we do know. Trade with Britain accounts for 0.3% of US GDP. So British problems with trade don't necessarily translate to us. We don't foresee any structural changes to the US economy either as a result of the Brexit. Some companies and sectors will be more affected than others, particularly those that have more revenue exposure to the UK. We could see an effect on their corporate earnings, However, the dollar is often viewed as a safe haven in times of international turmoil, which can push the dollar value up versus other currencies. A stronger dollar may weaken demand for U.S. exports, which could then in turn drag down our economic growth. We should keep in mind the fact that the U.S. is a consumer-driven economy and that wages, the housing market improvements, and personal finances all support consumer spending right now. Will the Brexit be enough to push the U.S. into a recession? That's not really likely, though it could contribute to weak growth in the next couple of years for us. We think a major factor will be whether the market turmoil is enough to have a negative impact on business and consumer confidence. If so, we could see a greater effect on the U.S. economy. So let's close by talking about what investors should be doing right now. First of all, tune out the noise. We're going to see a lot of terrifying headlines about the Brexit, and it's not good for your mental or financial health to be glued to the media. Let us filter through the news for you and communicate what you need to know. It's one of the most important parts of our service to you. Secondly, focus on your own financial goals. Do you know who isn't exiting the EU? You aren't. America isn't. Political events don't change your goals, and it's critical to avoid emotional reactions. When markets stumble, the smart move is to sit back, take a look at the fundamentals, and make prudent changes where necessary. We'll be in touch personally if we decide you need to shift your strategy. So it's too soon to tell what the Brexit will mean for markets. No one can agree on probable outcomes yet. Though we don't think the Brexit is the end of the world, we want to acknowledge the risks it may pose to the markets. Right now, your job is to stay calm and focused on your goals, knowing that there is a team of serious professionals who are taking care of the details for you. You can stay abreast of critical information in our weekly market commentaries, monthly video updates, and our upcoming halftime report. Thank you very much, and have a great rest of your day.